Hello, everyone. Good morning. From here, it's a beautiful morning from this part of the world. And depending on what time zone you're tuning in from, I want to wish you a good afternoon and good evening. I'm very excited, as always, to welcome you to our first edition of the Forex Morning Mastery for the new week. And I'm delighted to share with you some very interesting trading setup that we are going to be using to navigate the market this week. We all know how today is, being the first trading day of the week, and of course, it's important for us to the nature of the day. It's important that we have a deep understanding into what is going on in the market, using that information on our charts to decide whether we are going to be buying or selling. So as always, I am going to be monitoring three financial instruments for this week, which includes the USOILSPOT, the USDJPY, and of course the XAUUSD, popularly known as the gold spot. And of course, for those of you who are following me on my Telegram, TradingView platform, and of course on YouTube, you must have seen my plans for the gold commodity this week. Update us this morning with a new structure on the 1 hour time frame that I want to be using to navigate the market today. Now, for the other assets, that is the USDJPY and the US crude oil, today we are going to be taking a well-detailed top-down analysis on this asset, where we are going to be using the fundamental factors and of course the technical details we find on the chart to strategically position ourselves for the next move. So if you're a fan of any of these instruments, you do not want to miss out on the session, stay tuned in, and don't forget to click the like button as if you found this content helpful and useful in making your independent trading decisions. And for those who are joining us for the first time, my own name is Sheriff Daramola, and this is the Forex Morning Mastery. We run this session 3 times in a week, that is Mondays, Wednesdays, and Fridays. These are days when I trade during the week, and as a result, I share my daily plans, my daily updates through this platform. I welcome you on board and encourage you to actively engage in the comment section. So with that said, here we will be diving right into the business. And for those of you who have been following me for a while, you know how we do it. The first thing we want to be doing is to have a deep understanding into what is going on in the US dollar market. We know how important that is. There is no way you want to be trading the Japanese yen, the crude oil, or the gold commodity without really having a deep insight into what is going on in the US dollar market. Now, what you see on my screen right now is the DXY, that is the US dollar index. And this chart here gives us an overview into how the US dollar is performing across board. And what I was able to capture here on this chart is the character of price action in the last 7 to 8 weeks. This is capturing from 8th of May to the present moment. And we'll all agree upon is the fact that the dollar has been on a downtrend. We can see from the structure price action had evolved into that price action had transitioned into what is looking like a descending channel after connecting the series of lower highs and of course the series of lower lows. Now, we saw the last week closed at around the 97, around that resistant line of the descending channel. So this was exactly where price action closed last week. And of course, for those of you who followed me yesterday during the Forex market prep, we talked about the fact that the dollar dropped significantly last week. It dropped into one of its lowest points in recent time, that is the $96.35 level, before we saw some recovery during the second half of the week. And of course, the drop in the value of the US dollar could be attributed to worries, fiscal worries, trade tariff moves, and rising odds of Fed rate cut expectations. And one of the things that we saw at the beginning of last week was an immediate reaction to the what's it called again? The trade. It just escaped my mind right now. Hold on a second. I just So we had this bill that was passed in the Senate last week, and it is expected to increase the net net debt of the U.S. by about $3.4 trillion, and as a result of that, we saw major key players dump the US dollar at the beginning of the week. Now, with the way things were going, we saw that during the second half, following some impressive economic figures like the labor sector, which later culminated with the NFP on Friday, we saw the NFP come in with a whooping 114,000 jobs created in the month of June, which was way higher than the market expectations of 110,000. And of course, this further gave some comfort to the US dollar, and we saw a little bit of recovery, and it appears the market is still basking on the outcome of that NFP. As we can see, price has finally broken out of that resistant line of the descending channel right around the $97 area. Now, the question as we head into the new week is whether this is going to be a true breakout or a false one. If it turns out to be a false one, we are likely going to see price drop back below the resistant line of the descending channel, maybe a retest of structure to incite a sell-off. And of course, if this turns out to be a true breakout, we could see at some point price come back, retest the structure to continue an uptrend move. Now, from a fundamental perspective, what are the things that we are looking forward to this week? Well, if we look at the economic calendar, there are a couple of impactful events from the United States. Now, one of which is the publication of the FOMC minute meeting, which is coming up on Wednesday, July 9th. And of course, everyone is looking forward to the speech, which could also drive volatility. And then we also have a labor-oriented data coming in on Thursday of the initial jobless claims. Now, this is going to also drive volatility in the market, where a soft labor number will likely push the dollar weaker, while strong jobs data might spark a bounce and of course push the value of the US dollar to the upside. Then we also have the scenario around the ongoing tension and uncertainties around the trade tariffs under the pending US fiscal package, which may continue to undermine the dollar's confidence at this point. So you will agree with me that we are at a critical juncture in this market. As you will see, price is just around the $97 area, an area which is exactly around the resistant line of the descending channel. So what we are going to be doing now is to today is Monday, right? And there are no impactful events today. So definitely the next available event is coming on the 9th. In fact, that is when Trump will be announced. That's going to be the deadline of the trade the tariff placed on countries from the United States. So we are looking forward to see what will happen. And pending that, we may likely see extended sideways trading activities as major key players step aside from the market, waiting for the outcome of this deadline on the 9th and then the FOMC meeting before making any aggressive bets. So we need to really be very careful. And of course, with this information we have here, and then we also have some Fed speeches on Thursday too as well. So these are going to be bringing some insight into the current Fed monetary policy. And of course, that reminds me, based on the labor data we saw last week, now the Fed are in a tight corner. They've been considering cutting interest rate, but with a tight labor sector at this moment, interest rate is likely going to be cut anytime soon, except we hear anything new from these Fed officials. On Thursday, we have Musalem, we have Walla, and then we have Dali Hall, who are going to be speaking, and everyone will be tuning in to hear their narrative about the current monetary policy from their own perspective. So these are the events we're looking forward to this week, and they are going to be playing a significant role in guiding our trading decisions. So now, with that said here, I think we'll have to move right into the first asset we are going to be looking at this morning is going to be the US oil spot. Now, on the US oil spot, we have quite an interesting scenario going on at the moment. And of course, there are a couple of fundamental factors behind the scenes which everyone is going to be looking forward to. Currently, oil prices remains very steady. It's looking like demand is gradually building up momentum. In fact, if you look at the structure here on the 4 hours time frame, this is the 4 hours time frame. Let me zoom out so we can see what I am looking at. So if you look here, you will see that since the beginning of the month of May, price action had consistently found higher lows, giving us a beautiful ascending trend line to work with for this week. And looking at where price was last week, in fact, the last 2 weeks, I think, let me clarify that. I think, okay, yes, the last 2 to 3 weeks thereabout, we saw how as soon as price, despite that big fall we saw that started mid-June, we saw how sellers had found it difficult to break through that $64 level. And look at what happened in the last 2 to 3 weeks. Price kept on consolidating within a tight range of about $1.50, further emphasizing that sellers are finding it difficult to break down that area. And of course, we saw something interesting happen last week. Let me zoom in so we can see things clearly. We finally saw a breakout of that range bound structure, right? And then we saw price come back, retest that $65 area, and it appears that the momentum is gradually building up in favor of the buyers. And to help me navigate this market this week, I'm looking at the key level around the $65 area. So as long as price remains above the $65 level, we want to continue to look out for patterns and structures that support buying ideas. We are not considering selling unless the key level and that ascending trend line is breached and broken to the downside. And in fact, before I want to start considering selling, I would like to see confirmation. Remember, the $64 area had been a robust demand. The fact that it has a strong memory for buying power, we need to be very careful before jumping sell. So a confirmation will do just fine, like a retest of structure before we consider selling. And based on what I'm seeing right now, I'm beginning to lean towards a bullish perspective in this market. And of course, if we take into account the situation around the Feds, for instance, and of course the recent the Houthis by the Israeli military. That was yesterday. It could further escalate situations in the Middle East. So for me, I want to think that this could be one of the key factors that could push price to the upside. Now, with this information here, let's scale down into our execution time frame on the 1 hour, so we can see how the market has been reacting to this trend line since the new week had began. Now, with this morning, so we saw here that price started the week on a weak note. We saw a bearish move as we saw price started the week around the $65.62 level, dropped into the $64.70 area, just right around that ascending trend line. We saw price move up to the upside. This old transition here happened during the Asian session, so I wasn't around. If I was around, I would have taken that opportunity there, considering the buy pressure around that area. Now, we had a bounce structure prior to today's session, and with this scenario here, I'm looking at buying the breakout retest of the $65.62 level. So at this point in time, I'm yet to take a position, right? So I want to see maybe a retest of structure happen, come back, retest the structure, and then I will jump into a buy. And of course, stop losses will be somewhere below the trend line or the key level, which dovetails to about 60-65 pips of stop loss, while we look to buy more or add more buy positions if price action goes ahead to break out of the $6.50 level. Now, there's one thing I would like to say here about this bullish expectation. As soon as price gets close to the $66.50 level, we want to be moving our stop losses to secure that first buy position. We obviously can see how the $66.50 level had played a significant role in resisting buy pressure. So every time price had come into this area, we saw sellers push price to the downside. We saw it happen here last week, and of course price is gradually approaching the structure. So we want to see if the market will finally break it out today. So as soon as price gets close to that area, we move all stop losses, secure the buy position, and wait patiently to see how the market reacts to that level. A breakout retest will definitely confirm buying opportunities. So that is what I'm looking at to buy the USOILSPOT today. And for those who had captured the buy position, if you're running with about 50 pips, just move your stop losses to at least break even, secure your position as we continue to monitor price action around here. Now, for those who are considering selling, especially considering the fact that the US dollar is strong right now, we saw a resurgence in the US dollar since last week Friday, thanks to the robust NFP figures. And we all know that the US crude oil is a US dollar denominated asset. Now, if the dollar continues to increase in value, what happens? The crude oil becomes very expensive for other currencies to purchase. Now, what do I mean by that? So for instance, if the dollar continues to rise in value, those who are holding other currencies will need to convert their local currency to the dollar before they can buy the US crude oil. And as a result, if the dollar is expensive, you know what that means. Demand will reduce, and when demand reduces, selling pressure will increase, and then the price could drop significantly. So if we look at the logic around the recent increase in the US dollar, it could limit the upward trajectory of the crude oil prices. So that is why it's important that we also take into account the possibilities that sellers can also come into this market. And if they do come in, where will be the most appropriate area to start considering selling? Well, I said this earlier, based on this this range bound structure we've identified here, that is this $1 range bound area, we would like to see price break down the $64.70 level with a retest of structure, of course, before jumping into a sell. But if we look at the structure we marked out on the 4 hours time frame, where we had this ascending trend line in place, which interestingly lines up with the key level at the $65 area. If I can see something like a breakdown retest of this trend line, I will be willing to jump into a sell and of course have a sell stop order below the $64.70 level. So that is basically what I am looking at to capture any trading opportunity around the US crude oil. But at the moment, we remain bullish. Price remains above both the key level and the ascending trend line. So we definitely at this point are looking out for patterns and structures that support buying ideas. So like I said, I've missed out on this one. I'm just waiting patiently to see if price will come back, retest structure, then I will be willing to jump into a buy. So that is basically what I'm looking at today. We have a simple setup. I encourage us to mark out these levels accordingly, as we are going to be using them as a reference point to guide our independent trading decisions today. So if you have any questions whatsoever, feel free to let me know in the comment section. I will take about 5-10. Let's see if there are any questions before we move on to the next asset on our watch list. Stay tuned in. All right. So in the absence of no questions, I want to assume that we are all on the same page, right? I hope you've marked out the structures accordingly, and let's see how the market will play out in the next couple of hours. And of course, I will be updating us accordingly on my Telegram platform as I continue to monitor price action. So moving on to the next asset on our watch list. So the next asset we are looking at is the USDJPY, and sincerely, I just missed out on this opportunity this morning. Just like I did last week on the USDJPY, it appears momentum picks up during the Asian session, the first Asian session of the week. So at this juncture, I have no other choice than to wait for new structures to emerge. And with the way things are going, it appears the Japanese yen is currently on the back foot. In fact, if you look at the 4 hours time frame here, since mid-April, we've seen the dollar do some recovery, and the structure we have here is a series of higher lows, giving us a couple of ascending trend lines to work with. And this, I think that this decline in the Japanese yen could be attributed to the fact that people are earning less in Japan and spending might drop significantly. Meanwhile, the US dollar is still strong, so investors are going to be choosing the dollar over the yen. But I will still not rule out the potentials the yen have at this juncture. For instance, if fighting in the Middle East escalates or the US decides to cut interest rates soon, the yen could regain its strength, and it's like that's quite friend will get serious when things get rough. You know what I mean? So at this juncture, the factors supporting the US dollars are many at this point. We have the expectation of aggressive rate cuts, which is not on the table at the moment, which, for instance, the labor sector is very, very strong in the United States. The Fed cannot cut interest rate at this point. Then Japan has weak wage data. We saw that happen last week. The wages fell for the fifth straight month, down to 2.9%. I think, I'm not sure if that figures are correct at the moment, but I know the wages dropped significantly, and that is not a very good sign for the yen. Then we also saw, and with wages and spending weakening, the Bank of Japan may struggle to raise interest rate at this point, which keeps the Japanese yen less attractive to investors at this point. Then if you also look at the trade tension, I'm talking about the Trump tariff threats, which increased global uncertainty and may disrupt the Japan's economy, making it harder for the Bank of Japan to tighten Japan's economy, making it harder for the Bank of Japan to tighten